How and why you should build your business just like a bank, okay? That's the whole premise and the whole purpose of this right here. Golly, okay? So when we're talking about how and why you should build your business like a bank, one of the biggest things that I want you to recognize and one of the biggest things that I want you to see and what I want you to know is that most of us are running our businesses wrong. And what I mean by running our businesses wrong, you don't realize that your business is a big ATM and is a big money printing machine if you do it right. Okay? Big money machine. So we go here. A lot of y'all remember, boom, boom. A lot of y'all remember this right here. And what I mean by remember this, you remember I talked about the bank being here. You remember I talked about the consumer. You remember I talked about the producer. And this actually can be found in what's called the banker's code. The banker's code. That's something that you want to learn. It's called the banker's code, okay? That's a book. And what it teaches in the banker's code, just as a recap, because I know it's been some time, in this book, it teaches that the customers are taught by the bank to borrow money to purchase something from the producer only to pay it back to the bank. And the bank teaches the producer how to borrow money for the producer to sell products to the customer only for the producer to pay back the bank. If you look at this triangle, or if you look at what I see, you can for yourself what? One thing. What's going on? What's going on? You can see for yourself one thing. And that one thing is that the bank is the only one that wins on both sides. The bank is the only one that wins on both sides. So I think it's very important for us to understand that as you're trying to learn how to become your own banking system, you want to position yourself and you want to position your business to be like that bank. And so when we think about a bank, a lot of us make this thing too complicated. When I talk about becoming your own bank or private banking blueprint, yes, we talk about insurance. Yes, we talk about where banks put their money, a surplus income in cash to be able to participate in tax-free death benefits, in tax-free cash, a tax shelter for your money to grow. Yes, that's cool. But becoming your own bank is more of a philosophy and a strategy than it is a singular product. You need several things in order to really make this thing called becoming your own bank really make sense. Okay, so one of the things that you want to make sure that you have, and one of the things that you want to make sure that you have and need is you have to have some type of cash flow or money that's coming into some type of entity. You want some type of money coming into some type of entity on a regular basis. Type in the chat regular. Type in the chat right now, regular basis. I want to see in the chat you type regular basis. And the reason why I want you to type regular basis is because what a lot of us fail to understand when it comes to running and building your businesses, you don't realize that the cash flow is absolutely important when it pertains to becoming your own bank. And if your cash flow is predicated on a little income coming in and a lot of income going out, there's not a way that you can actually build your own banking system efficiently because it's not operating correctly. And a lot of us actually have businesses, right, that cash flow, but you don't run it like a business. And you don't run your business like a bank, and you lose out on all of the benefits that come with it. So what do banks do? Let's look at what banks do, and we're going to just mimic the same process with our business. Okay, if you're still following me, press the number 3. I told y'all we getting into the sauce today, okay? Man, I got sauce, and you know I'm saucy. Okay, right? So look, so what does a bank do? A bank gets a customer. A bank gets a customer to give them money for exchange of some type of service. So a bank gets the customer's money for some type of exchange of a service. That's typically what happens. So that's what happens. A bank gets money from the customer for an exchange of some type of service. That's all it is, okay? How does a business get money? A business gets money from a customer They get money from a customer for the exchange of a service or a product. Isn't that looking very similar to how banks get their money? Yes. Now, I know what y'all are going to say in theory. Well, technically, the bank can get their money from the Federal Reserve and blase, 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 whoop-de-wop-de-bam. Cool. I understand what y'all are saying about that. But in theory, a bank cannot survive long-term or stay in business if customers are not giving their money to the bank. So what type of services do the banks offer people to give them to get access to their money? They typically get what service? Protection of your money, convenience of your money, translating your cash into a Visa or a MasterCard that you can swipe and keep track of. You got accounting, you got your numbers, you got your back office where you can track all your currency, all those different type of bells and whistles that the bank offers as a service or as a product to get the customer's money. So the same thing with your business and their bank. The same thing goes there. So what do? They service. They give some type of service, product, or whatever. So for all things accounted for, all things are equal. Is that not true? For all things that are accounted for, all things are not equal. So now what do we typically do? Usually what happens is now the bank does a few different things. The bank now takes that money and they build their infrastructure to make their companies better. So that money gets invested into the business or to the bank so that they can have much better, robust systems, technology, cash flow, marketing, and all of that for their bank to be able to grow. What does a healthy business do? You take the original cash flow, you invest it into your business so that you can what? You can be able to do marketing, you can grow your business, you can tunnel it, you can funnel it, you can do whatever you want to be able to grow and keep adding value to the customers. Why? Because the more solutions and the more comfort and convenience you can give the customers, the more they stay with you and the more they continue to give you money and send people your way. Are y'all following me? So as you can tell, the bank is no different than a business at this moment in time. But here's a couple of problems that especially when it comes to you running your business. A large majority of us, we get the money from the customer and we don't invest it into the business and back into our business. We take it and we go buy dumb stuff with it. We take it and go buy dumb stuff with it. That's what we go do. So you got an owners of a business that typically what we do, we make the money and then versus investing it, we don't do that. We take the money out and then we go buy it on dumb stuff like lifestyle. Well, what happens with a bank? What happens with a bank? What do they do? Well, typically a bank has a board of directors that own the bank. And I know it's hard for a lot of us to understand or for a lot of us to know that the bank is actually owned by people. I know it's a little hard for us to understand it, and I get it. I get why it's hard for us to contemplate or even think or can even imagine how the bank is owned by people. So just like right here, these three own the bank. Technically, whoever the board of directors are, or whoever owned or started the bank are the owners of the bank. That money is now out of my account. I can write it off because it is a loan. If I'm receiving the money, I don't have to count it as earned income because I borrowed it. And I can charge myself interest on whatever I want to charge myself with expectation to pay it back to the company. Right? This is a strategy that most extremely successful businessmen, they do. This is why you see a lot of them say, I don't borrow money, because a lot of them are using their business as the bank for other endeavors. But one thing is important. The owners, if they do not pay the money back, the bank, they can lose their bank charter for not handling things properly and end up in jail. But we loan the money to ourselves, but we never have expectations to pay it back. Thus, we are robbing our own bank. So a lot of you, we use our businesses the right way. You sell your company, you sell your products, you sell your services, yet you're taking money out of the business for whatever you want to purchase without the expectation or intention to pay it back. Without the expectation or intentions to pay it back. This is why you do it. So when you loan it to yourself, whatever your monthly payment or your monthly payroll is, you need to have some type of payment plan where you can actually pay it back to your business because your business actually became your bank. So I see a lot of people, right? A lot of people that got healthy businesses that talk a lot about lines of credit. And at this point in time, in gesture of my, whatever financial career, I really don't give a damn how you get it. Just get it, okay? My only thing I want to do now is just teach people how to navigate whatever decision that they decide to make. However, I see so many people do this. Say for an example, you got $100,000 in excess in your account. Say for an example, you got $100,000 in excess in your account. In excess. I don't know how to spell X. Oh yeah, excess. There you go. Excess, right? In your account. Your business is operating perfectly. Your business is operating perfectly. But we take, let's say, 50,000 of this and we just go spend it because we deserve it. Cool, that's fine. You already getting payroll every month. And what you actually can do versus taking the money and spending it and trying to figure out if it's going to be expense or not, you can actually set up a document and loan it to yourself. The 50,000. Now this is a write-off for the company because it's off the books. It's a loan, money out. You're lending it out. This 50,000 is now not accounted as income because loans are not accounted as income. Now you got this 100,000 in access, or 10,000, 20,000 access. That's your new line of credit. What do people always say about a line of credit? You want to build your line of credit. Why? Because you want to build it and pay it back. Build it and pay it back. So why? That it can continue to grow and you always have something to build on. A lot of people don't realize that you actually have your line of credit in your business if you operate it healthily. Your line of credit is in your business. So when you pay it back, all you're doing is just building this relationship of money going out, money going in, and you can actually get the things that you actually want when it comes to running a business like a bank. And so a lot of us, what happens is we don't even realize, and many of us that don't own businesses or don't even own LLCs or whatever the case is, we don't realize how many things that we lose out on because we don't operate our stuff in the correct fashion. So the bank gets the customer's money, they service their business, they lend the money out not only to themselves as owners, to other people. And then they use those profits that come back in return for them to be able to live the life or lifestyle that they actually want to live. And notice I didn't even really talk about insurance reserves piece, because the insurance reserves is a place where you dump your surplus cash and you can do the exact same thing over and over and over and over and over again until, the situation is a situation. And so the biggest thing that I want to leave with y'all, and I'm trying to work on not being so long-winded so y'all can get to the point, y'all can get up off this thing. But the biggest thing I want y'all to see is that your business is the bank. Your business is your bank. That's a bank. And that's your business. That's your bank. That's your business. Bank and business. Customers give the bank money in return for a service or a product. Customers give your business money in return for a service or a product. The bank then lends the money out to a person That person pays the bank back in interest. Your business can lend the money out to a person or another business with expectation that you're going to get it back in interest moving back and forth. When you have a flow that works like this, and this person can be you, or this other business can be another business of yours, but you are playing in a world where only bankers play, where the bankers actually control the tax laws. So you want to play the game like the bankers. You want to play the game like the bankers. If you do that, you'll be just fine. And that's all for today's lesson. That's all y'all getting today. Because I want to make sure I'm getting y'all concise information in a short period of time so that you can be able to get the tremendous value that you need. So right now we have 102 people live on IG. We have a couple of people that are on our YouTube as we're building it up live right now as we speak. And what I want you to do after this video, I'm going to post it on my page. And it's going to be up for you to kind of see it. And if you want and you found value in it, the only thing I'm asking for you to do is to comment and share something that you learned from today's class and video. And if you really, really love me, if you're on IG, go to YouTube, subscribe, and share my page so there's more crazy information that we're going to be delivering to y'all on a daily basis. And everybody else, please listen. I love you, and there's absolutely nothing you can do about it. Peace.